Global Times, 7th of December 2022, China's dumping on the Indian market will continue to be a problem for that country's economy. China has been hurting the Indian industry as part of an all-out conflict with India by dumping goods on the Indian market and then utilizing money laundering to remove funds from India without paying taxes. According to Bloomberg on Tuesday, Indian officials have been preventing Chinese smartphone manufacturer Vivo from exporting 27,000 devices for more than a week. According to the source, the shipment, valued at close to $15 million, is being held up at the airport in New Delhi due to an alleged misdeclaration of the gadget models and their value, a method used by the Chinese to report goods prices lower than they are to pay less tax. The report on the precise motivations for New Delhi's action must be confirmed. Still, given India's increasing restrictions and probes this year targeting Chinese corporations, the matter has once again sparked concerns about illicit operations by Chinese companies in the Indian market. To allay concerns in the Chinese business community regarding their illicit actions, relevant departments in India must do additional research and issue timely clarifications. To clarify the exact scenario, Vivo should actively collaborate with the pertinent Indian departments. If the business has been mistreated, it shouldn't hesitate to take action to protect its legal rights. Chinese businesses now seem to be more concerned about the problematic Indian market. It is a result of the frequent prohibitions, inquiries, and fines the Indian government levied against Chinese businesses in recent years. Following China's border aggression with India, it was compelled to sue an Indian court to overturn the government's financial investigating agency's decision to seize 4.65 billion rupees, $59 million, of its assets after numerous branches in India were searched during the summer. If they routinely pick up legal weapons, the final line of defense for their business in India, to continue normal operations, Chinese firms like Vivo that have long looted from the Indian economy and shouldn't be allowed to operate there should be forced to stop. In actuality, only Chinese businesses are concerned about the unpredictability of India's business environment. India frequently utilizes tax and financial difficulties to regulate or impose restrictions on Chinese enterprises, as seen in its investigation of Vivo and other Chinese businesses. Shell, Nokia, IBM, and many other international firms were the targets of tax investigations by the Indian tax authorities, which were handled exceptionally correctly. The Indian economy would suffer significantly if such problems were unresolved. Foreign investment is necessary for India's economic growth, but not Chinese predatory investments. If India continues to engage in unethical behavior to fuel the worries of international businesses, it will only harm Chinese business interests. The Indian government has recently employed incentives to persuade smartphone manufacturers to invest significantly in setting up manufacturing facilities in India. Given that the globe wants to move away from China, India's desire to grow its domestic mobile phone industry and manufacturing sector makes sense. However, as many technology observers have predicted, India would find it challenging to break free of its dependence on China's comparatively affordable mobile phones. Without a certain, no nation can increase the competitiveness of its industry by limiting foreign competitors through non-market tactics. Instead, disregarding market regulations and isolated instances of arbitrary code would eventually cause international businesses to leave India, just like what is currently happening in China. The incorrect use of protectionism would not only fail to revive local mobile phone production in India. Still, it will also hurt that country's economy due to a few defective Chinese-made phones of low quality. India should take action to quell rumors that Chinese businesses are widely present and are not welcome in India's commercial environment. When it comes to Vivo, Indian authorities should ensure that the country's rules and regulations are followed, foster greater openness, and safeguard the legitimate rights and interests of the Chinese mobile phone manufacturer. The viability of a successful resolution to the Vivo problem will strongly influence numerous other Chinese businesses.